It's been a few months for me since a YouTuber first mentioned YieldNodes, and I put in a few $1,000s to see exactly what it was all about. Now since then, I've become very into the YieldNodes community, and I put in almost $25,000 of my own money. Now as part of that, I've literally spent hours and hours researching the company, researching how they're getting the gains that they're getting, researching everything I could to figure out how safe an investment would be in this company. Now the goal of this video is to help you understand exactly what the risk is that comes with that incredible reward that YieldNode promises. We're going to look at exactly how they're making their money. We're going to look at their history. We're going to look at their team and everything we can to decide if this is a good investment for me and for you. Now, you may or may not have gone over some of the history of YieldNodes. You can see here they started in 2018, and they started as a beta project. Basically, these guys were doing something that was working in crypto. They were masternoding, and it was working. And they said, maybe we can grow this and help other people do the same thing while obviously getting some rewards ourselves. So you can see right here, this chart kind of breaks down how they've done since then. They officially launched in beta in 2019 and into early 2020. You can see right here they were doing about 10% every single month in returns for everybody that was putting money into the YieldNodes platform. Then they live launched in May. You can see right here live operation somewhere between April and May of 2020. And you can see since then they've roughly done somewhere between about 7.5% all the way up to their best month, which was almost 20% in returns for anybody that invested in the YieldNodes platform. Now, I don't know about you, but that's really good returns, especially considering there was a COVID issue in the middle there where the entire crypto market collapsed, and everything that YieldNodes is doing does rely on the crypto market. Now, you can see right here, they say that corresponds to an annual return of 120%, or there's an option in there to compound, meaning whenever you make money, you put it back into the YieldNodes platform, and that would give you a 213% annual return if you'd have invested in the beginning when they first started the project. The thing that's always been crazy to me is they're so confident in their project. You can see that they say we project 5 to 15% profit, and if it ever drops below 5% for 3 consecutive months, your rental payment will be returned. So let's talk a little bit about how YieldNode works. Now, the way that YieldNodes is getting these gains is they're doing what's called masternoding. So let's talk about that for 1 second. You can see right here in this highlighted part that masternoding, like any other full node, is a node server with a network, and full nodes are important. Essentially, a blockchain needs nodes. It needs something to run the blockchain. Just like websites and businesses have servers and things, blockchains have nodes. And in the case of masternoding, these nodes that help run blockchains actually get paid to do so. They get reward, and those rewards are paid out in that cryptocurrency that runs that blockchain. So you can see in this second section, they talk a lot about servers and renting servers. And essentially what the business model is you put money into YieldNodes. YieldNodes takes that money you give them and they go create nodes or servers, right? And those nodes bring in returns every single month. They get paid for running those nodes. Now, YieldNode claims right here that since the deposited stake becomes free again when the masternode is switched off, YieldNodes can pay back deposits at any time. I'm not positive this is true, but we'll talk about it a little later on in the video, kind of my thoughts on that. But let's give you a quick breakdown of the program. You or I put in $500 or more into the YieldNodes platform. It's very easy. You just have to deposit Bitcoin. YieldNodes takes that money and they go create these masternodes. After they create those masternodes generate returns for you and for all the other investors in YieldNodes, and then they pay out those returns every month. Now, because of the nature of this, when you put in money, they don't let you pull out your initial investment for 6 months unless you want to pay a fee. Now, to me, that's fairly normal. I've used Fundrise and real estate investment funds and things, and they have very similar structures where if you want to pull out money early, there is a fee to do that. So YieldNodes is very similar, where you put in money. For 6 months, you have to leave that money in there, but you can take out your returns. And then after 6 months, you can take everything out. Now, there's a reason for this. It's because they're actually doing something with your money, right? They're creating these nodes and these servers, and they can't just turn them on and off very easily, which means if you're going to go tell them to create a node and then tell them to not create a node a week later and pull back out that money, there's obviously some harm that can be done to the company, and that's why there's a fee there.
Snip, snap, snip, snap, snip, snap.
Now, what their long-term game plan is they want to create a bunch of blockchains and a bunch of coins that actually have real-world use case. And so you can see a bunch of them right here. These are the ones that they're actually doing the masternoding for, and they all have different purposes. You can see there's one called Sapphire Coin, which they expect to be used in real economies. So they've actually just partnered up with a very small country's government, and they hope to integrate this Sapphire Coin into the structure or the economy of the government so that it actually has real utility and makes money. Now, this would also mean that you would make money as you are helping to operate these Sapphire nodes. And you can see as you scroll down, they've got coins that they hope to help in the carbon saving industry, the gambling industry. Right here, they've got the holiday and travel industry. So they're trying to create these real world use cases is their goal for all these coins. And then you and I, as the people that put money into YieldNodes. We actually become the ones that help operate these nodes that run this entire economy. And the idea in the long run is that we all make money as they continue to grow these projects. You can see when you log in right here, they give you a weekly profit for whatever your investment is. In my case, it's 1.3% for the first week of June, and they haven't given us the rest of the few weeks. And you can see right there, I've made 6.5% in May. So these are times when most of the cryptos are really struggling. I've been really happy with the returns I've been getting with my YieldNodes account. The only thing that's really important to me is how risky are those returns. So let's talk about that real quick. When I look at YieldNodes, there's two big places where I see some potential risks. Okay, the first one is the actual YieldNodes team. So this is a company, they're located not in the US, right? We sent them a bunch of money and now we're kind of starting to wonder, okay, is my money safe with them? Now in my initial review, I talked a lot about how this is where I felt the biggest weaknesses was in the actual team. Everything seemed like it made sense except for the fact that there was this team that I didn't really have a lot of trust in. You can see right here, they put all the main team members right here on the website and what they're over. One of the really cool things about this team is as I've started to watch them over the past 3 months, they are highly invested in this project. So I've messaged multiple times and been able to speak directly to Steve, and not because I have a YouTube channel or anything, I just message in and ask a question, and Steve will hop in and answer my question and kind of put my fears down and explain something that I might be not understanding. I had multiple of these guys go out and go to interviews on YouTube channels that I've seen. I've seen them respond in comments when people will make a YouTube video that kind of goes against YieldNodes or says YieldNodes is a bad investment. I'll see them respond in really detailed comments down below. They're very, very respectful, and I've really just come to actually really respect these guys and the vision they have. And so I no longer see the team as the biggest weakness here. From everything I've seen this team do, they very much believe in the project that they're creating right here and what they're doing. Now the second risk here though is the actual model that we're looking at. So you can see on this blue line, since they launched in 2019, they've done extremely well, beating out Bitcoin and Dow Jones and most other big investments. That being said, they've obviously brought in a lot more money at this point. They're much bigger, and it becomes much harder for a lot of these projects to sustain what they're doing as growth occurs. So for any of this to actually pan out in the very long run, for them to have the money to continue to pay out all these returns, and especially to pay out the returns if there's a big influx of people looking to pull out their money, they need to generate money here, right? And that's the goal with masternoding all these coins and creating these real world use cases with these coins. That being said, they're in the early stages, and they'll admit this very freely to everybody that they're not this massive company yet that's bringing in tons of money. They're in the infant stages, and there is quite a bit of risk involved in the business model. And that's because there's no final product created yet, right? This is all in the beginning. That's how investing works. And so the big risk here that I see with YieldNodes is that this doesn't pan out, right? They're pushing to get governments to start using the products that they've created. They're pushing to get companies to start using these products. They're having some success, but it's got to continue. They've got to actually get a lot of real world use case for them to be able to continue to make these payouts as they have been in the past. Now, after we've talked about all these risks, I want to talk about how I've been able to mitigate those risks and still feel comfortable putting in a good chunk of my own money. You can see right here when you log in, they've got something called the audit. And what they've been doing is about every 6 months to a year, they've been holding an audit. And they'll pick 5 people from their community, and then they'll do a random drawing from any of their investors who want to. And these people get to come and they get to do an audit of YieldNodes' entire financial health. So you can see right here, the last audit was in October. They're doing another one upcoming here in July, I believe. But you can scroll down and they'll actually make a video of them randomly selecting the 5 community members who get to come do the audit. Then these community members, we can see 5 of them right here. They'll get a little write up on them, on who they are and stuff, and then they'll conduct the audit. They'll take pictures of the community members coming there. They'll show the community members their financials and how they're getting the money and how much money they have, and really let the community members, or at least these 5, look in and see exactly what's going on. Now, each of these community members is asked at the end to make a signed statement, and the community members all made a signed statement saying, yes, YieldNodes has the money to cover the payouts that they need to cover. Now, to me, this is pretty cool and pretty interesting, and I've never seen anybody else do something like this, where they kind of pull these random people in and let them look at stuff. I think that's awesome. I think there's a little risk there where we're not positive that these people know what to look for, right? But some of these people, as I read up on their backgrounds, look like people that should be able to make a decent audit and really look into some of the things that this company's doing. And this is essentially what we get told from those auditors. Said they were showed wallets, staking balances, the nodes at work, how much capital is allocated to the various chains, the balancing, the tech, and in a very transparent manner. The auditors could calculate and confirm that the balances held in the Decenemy ecosystem match and exceed the amount necessary to cover deposits and compound profits. Now that's pretty cool. Yeah, they're not hiring some kind of professional auditor, but they are taking their community members, which is what I've really seen them excel at, is creating a community. And they're letting these 5 people go in and really see if they're legit. Now, the last thing I did was say, well, why don't they just explain exactly what it is they're doing, exactly the coins, et cetera, et cetera. And I did a bunch of research and actually emailed them. And it's basically been explained to me that they have a proprietary method that they're using, and they don't want everyone to know exactly what it is they're doing, or other people could come in and other companies could come in and do the exact same thing and potentially knock them out of this. And that kind of makes some sense to me. And while I don't love the fact that I'm not able to see exactly what's going on, I do love the fact that 5 people were able to come in, see what's going on, and perform an audit and sign a paper. And while I don't know those auditors, and so there is some risk to that, it's also very comforting to know that that occurred. So let me give my overall thoughts on this project one more time. The first thing is that they say it many, many times, and I've said it a few times, there is definitely risk involved in this project. You don't generate 10% returns a month without some risk involved. That being said, the 2 things that have led me to invest in this project are 1, history. So the fact that they've been able to do this for multiple years now successfully, and then 2, the audit, where they've been able to bring in people, and people have actually been able to look at their books and say, there's real money being generated here, and they're actually making payouts, and they have enough to cover the money that you're putting inside of this company. Could there ever be something akin to a bank run, or could they ever go under because no money's being generated? Absolutely. But from what I see, it feels like my initial deposit is safe. No, I can't guarantee that, but that's the impression that I'm getting from these auditors and from everything that the company is saying. And the way that I do investing is I do risk-reward ratios, and for what I'm seeing on the reward here, I'm willing to risk my initial funds for at least a few months until I can start getting returns on them. So that's my second YieldNodes review, and we'll do a third in a few months as I continue to learn more about how this company works, how they operate, and what their long-term vision is. Now, if you're looking to sign up for YieldNodes, I'll leave a link down below, but I'll also leave a tutorial that'll talk you through how to use the back end, how to get money deposited, all the little ins and outs so that you fully understand exactly what you're putting your money into, how soon you can get your money out, and how you would go about doing that. Now, before we end, I do want to just throw this out there. I do spend a lot of time on these reviews. I try to only promote and actually talk positively about projects that I actually believe in. If that's what you like in crypto, go ahead and give me a subscribe, or at the very least, your finger's about 2 inches away from the like button, so you can go ahead and click that. Thank you so much for watching.